Yo, what's up guys, welcome back to another trade recap video. Today I'll be breaking down one of my gold trades which I've taken on 7th July 2026. So without any further delay, let's hop onto the charts. Firstly, let me erase all my drawings so that I can redraw them. Alright, on the daily time frame, if we see, we were clearly bearish, but how did we determine that? Firstly, we have this one demand zone from where price rallied to all-time highs, and we swept liquidity over here too. We swept all this liquidity. So if we sweep liquidity, we must deliver it to some other side, like to another high where price has opposing liquidity. So when we come onto the daily time frame, we can clearly see we were bearish. We just had one change in state of delivery and a break of structure eventually, but we were retracing into a daily POI being an order block. So if price swept liquidity here, it has the potential to fill buy side liquidity over here. So I was having a neutral bias. I was looking to just react of what market would provide for us. So coming on to the 4-hour time frame, let me just replay this. 6th July, and there we go, 7th July. All right, coming on to the 4-hour time frame, if I refine the daily order block, we were clearly respecting this 4-hour order block, and we had this mitigated breaker block too, which I just marked as an confluence, which I saw on the chart because it was matching with the equilibrium level of this whole imbalance. So that can be our target draw on liquidity. So this was what I was observing. We were bouncing between two important PD areas. So I had a neutral bias. If we didn't mitigate this order block, then I would have not taken any trades because price has the potential to move both sides. But now this is just acting as a draw on liquidity as we have this imbalance over here too. So dropping onto the 2-hour time frame, we can see we clearly broke structure to the downside, and we are disrespecting these FEGs. We disrespected this FEG, we created new FEGs, and we're displacing off them. So I had these POIs in mind. If we react off bullish POIs, we are going to look for some bullish trades, but we are drawing from buy side liquidity. So I was more bearish. I was just looking for a bearish POI to be tapped, we sweep liquidity, and we take a potential trade. I was not interested in taking bullish trades, and my bias was bearish. That's how I fixed my bias. It was a reactionary bias. So let's drop onto the lower time frame, and let's just play out till London session and see what price did. So coming into London session, you can see that 1 hour also market structure we're clearly bearish, then 2 hour also we are clearly bearish, and 4 hour we broke structure previously and we tapped into the equilibrium level of this imbalance. So after this, I was waiting that if we respect this imbalance, we can potentially target more liquidity which is lying below. So my POI was on the previous day's extreme order block. If I get onto 15-minute time frame, we have this beautiful order block of the Asian session. We also swept, on the Asian session we tapped into this previous day's extreme order block, showing more signs of bearishness than bullishness. So I was leaned towards the bearish bias and nothing interesting, just waiting for a liquidity sweep of the highs. And as you see, we swept the previous day's highs and we tapped into this extreme order block also, creating a lot of liquidity. We had some high time frame SMT also. See, silver was not as bullish as gold, so there's clearly something cooking up in gold. And getting onto the execution time frame, let's just wait for New York session to start. So this is a place where price can react bearish, and we have multiple POIs over there. So I was just looking for my entry model to present itself, and right there, if we get onto the 1 hour time frame, we swept pre-New York's high, and I was waiting for a clear SMT which formed around 9:47 UTC minus 4. So we inverse this fair value gap, making a change in state of delivery too, and I just wait for it to make a new high, a bullish candle indicating the break of structure, and then I take the trade. Right here I make my entry. So my stop loss was right above this high. Let's just replay this trade, and I was targeting a simple 1:2. My break-even point was below these equal lows because that's a clean draw on liquidity. So let me just remove all the drawings and let's see this trade play out. So this is my break-even point, these equal lows, and once you play it, we had a clean TP. So that's it for this trade. The lessons you can learn from this trade is have your POIs marked and you can form a reactionary bias. Start with drawn liquidity, look for your POIs. See, the market is like a river. You must flow with the river. You can't go against it because it won't be sustainable. Just react of where the river is flowing. The river can flow from north and suddenly flip its direction towards south, then to east, then northwest. It can do anything it wants. Mark your zones, start with drawn liquidity, and just flow with the markets. That's what I've learned from this trade. So that's it for this video, and hope I see you guys on the next videos too. And thank you so much for watching. See you on the next one.